Um, Thank you guys for joining on time. Good evening, good afternoon, and good morning from wherever you're joining across the continent. My name is Irene Kimani. I'll be your moderator for the webinar today, and I will just give a few minutes for people to be joining. While we do that, feel free to drop in your locations from wherever you're joining us from, and feel very much welcome to this webinar today. We are happy to host you. As we do that, I'm just going to be checking your locations. Yeah. Please feel free to drop us your location on the chat box. And welcome so much to today's webinar. We are pleased to host you. See, we have William from Nairobi, Maureen from Nairobi. Thank you guys so much, and feel free to say hi to us. Please kindly drop your locations as we wait for others to be joining. Welcome so much, Quenville from Nairobi. As we're joining, kindly let us know where you're joining us from. Thank you so much for joining our webinar this good day from wherever you're joining us from. My name is Irene Kimani. I am your moderator for the day. I support Workway in the marketing department, And today we are just looking at the hidden compliance when it comes to managing benefits and their risks. And before we do that, just to mention a few housekeeping rules. Number one, this webinar is just being recorded, and we're live. We also are live on YouTube for recording purposes and also bookkeeping. Number two, it's purely listen only webinar. We also encourage you to drop in your questions as we go, and we're also going to be running some polls in the middle of the webinar. So feel free to participate and engage with us. With me, I have Diana Njuguna and Anthony Washira. I'll give them a chance to introduce themselves. And just going to introduce Workpay briefly. Workpay, we're an end-to-end HR and payroll software solution. We help companies across Africa to hire, manage, pay their employees. And why benefits is a core to us is because we have made it our core to support employees and employers, and seeing that we care about employees, it is important for us to tackle how employers can, miss anything when it comes to compliance, when it comes to administering these benefits. Thank you so much for joining. And I will just give our panelists of the day a chance to introduce themselves. Diana, you can go first, and then Anthony Washira.
Right. Thank you very much, Irene, for that introduction. Again, my name is Diana Njuguna. I know Irene has just mentioned my name. I hold the position of Global Benefits Manager here at Workpay with over 13 years of experience in B2B insurance sales, insurtech, and also business development across Africa. Here at Workpay, I lead the benefits administration, which includes the design, rollout, and administration of employee benefits. And I am really concerned and happy to be part of this conversation because employers ought to view employee benefits as part of compliance requirements, and at the same time also position the same as a strategic business advantage, ensuring that risk mitigation from penalties is taken care of, and also retaining top-tier employees is also handled. So welcome so much for this webinar, and looking forward to engaging with you. Thank you, Irene, and over to you, Anthony.
Thank you, Diana. Good afternoon, everyone. My name is Anthony. I'm currently the Managing Director of Olea Kenya Insurance Brokers. Before Olea, I worked for Aon, and before that, Alexander Forbes, in specific or in particular under employee benefits. My whole career has focused mostly on employee benefits, and a bit of background about Olea is we are a French company. Our head office is in Paris, France. However, all of our operations are in Africa, where we have offices in 27 countries in Africa and partners in another 13 countries. So in total, we cover about 75% of the African continent. We are also representatives of about 54 international brokers that do not operate or have offices in Kenya, including likes of Lockton, Howden, Gallagher, etc. Over to you.
Thank you so much, speakers, for the day, for that good introduction. Our audience, we are now confident that we are in the right hands, and we can just go straight into it by grounding this conversation. Diana, maybe you can tell us when we talk about employee benefits today, what really falls under this scope, and what are the mandatory and maybe supplementary benefits, and how do they differ across different markets today?
Right, thank you very much, Irene. I think that is a very fundamental question to start with, because the very definition of benefits is often the first place where organizations encounter friction, because most people hear employee benefits and they immediately start thinking about different parts, from gym membership to team lunches. But the reality is much broader than that, and honestly, even much more complex. So at WorkPay, when we look at employee benefits, we really think about it in two layers. The first one being statutory or mandatory benefits, and also supplementary voluntary benefits, which we majorly recommend to employers, because these two kind of benefits literally go hand in hand. And just to look at what the mandatory benefits actually offer, these are things that are literally required by law, and this is it's benefits that are not negotiated. Why? Because the law has set out statutory requirements. For example, when you go to South Africa, there is UIF. When you go to Nigeria, there is NSITF. In Kenya, we have NSSF, SHIF, PAYE, and these are requirements which the government expects every employer to on board on, as long as they have employees in that organization. And what's interesting is that even the contribution rates differ quite significantly depending on country of coverage. For example, if you go to Ghana, the SS NIT requires employees to contribute 5.5%, while the employers contribute 13%. But when you go to places like Tanzania, we have employee at 3% and the employer at 10%. And so you can tell that these structures are basically very different. So every single market has its own framework, it has its own deadlines, it has its own governance. And so it is important as an organization, as an employer, to ensure that you're doing the right thing, and of course, in the right way and in timely manners. So the second layer of benefits is the supplementary benefit. And this includes things like group medical, group life, private pension, and basically any other flexible pack that would exist depending on the country of coverage. So the things employers use to attract basically attract and retain talent are some of these supplementary benefits. And while this feels more flexible, they come with their own compliance requirements and considerations, especially because it comes with data governance and making sure that access is equitable across your entire access of these benefits is actually equitable across your entire workforce. So here at WorkPay, we ensure that the kind of solutions we offer employers and the kind of solutions that we guide employers across the various markets are actually compliant and are actually structured in manners that ensure that, apart from ensuring that employees are happy, that even the business itself has continuity, and it's a strategic way of covering all these gaps. For example, when we talk about the kind of experience we have had at WorkPay, it is important to note that even in the 35 African countries where WorkPay is registered, we have identified gaps in areas where you find that, for example, in Zambia, we have a mandatory requirement to have work injury benefits, but you realize that this is a requirement where you as an employer to ensure that you also file the same on an annual basis. However, the same benefit can be administered privately. So why we come in as WorkPay is to ensure that all these laws are able to be put together, ensure that employers are aware of them, and we are also able to guide them on how to go about the statutory filings of these solutions. So it is important that even as we go through our day-to-day engagement, we also realize that there are complexities in these benefits across countries, and majorly most mandatory and supplementary benefits actually try to mirror each other, or even try to ensure that you as an employer, you're well taken care of in terms of penalties and in terms of ensuring that your employees are very well covered. So another example I want to give on why we also encourage employers ensuring that apart from mandatory benefits, you pick up also supplementary benefits. If you look at countries like Tanzania, Ghana, and Malawi, they have their private, they have their statutory pension at above 10% or thereabout. However, when it comes to countries like Kenya, we have a 6% of the NSSF, tier 1 and tier 2, and also with a capping. And what does that speak to the employer or the employee? You find that these perks are not as adequate as what is available in other African countries. And so employers would be easily encouraged to take up a private pension scheme where then you're able to facilitate your employee to have an equal kind of solution or pension plan compared to what maybe their counterparts would be getting in other countries. Same thing with things like life insurance. If you go to Nigeria, you find that in Nigeria, life insurance is part of the mandatory requirements. However, in Kenya, life insurance is not mandatory. And so this is always a pack that an employer would be offering to their employees as an add-on. And therefore, if you have different employees in different countries, when looking for equality and just to ensure that your employees are well structured, you would easily be able to have all that information in one basket and be able to offer solutions to both you as an employer and also to your employees. And that really is what we've built here at WorkPay. As part of the automated payroll across Africa, we offer the expertise of benefits infrastructure to handle all these pillars in a single platform, ensuring that employers remain compliant and also ensure that they mitigate all this business exposure to penalties and at the same time maintain and safeguard their workforce. So thank you very much, Irene. I think it is clear to realize that employee benefits, as much as we have both mandatory and voluntary benefits, we encourage employers to bundle up the two and ensure that anything to do with risk mitigation is well taken care of, and also their talents are retained very well, because you realize that very top talent are aware or they know the value that they bring to the table, and therefore these benefits packs really encourage them to ensure that they have peace of mind and also deliver for the organization. Thank you, Irene, and back to you.
Wow. Thank you, Diana. Thank you so much for that extensive description. And before we go to the next question, let's quickly maybe understand how everyone here is currently managing, or how their employer is currently managing their employee benefit setup. And back to the audience, I'm just going to run a quick poll for us to see how you're currently managing your benefits or administration setup. So feel free to participate. I'm just going to give 2 minutes for this poll. Thank you so much for your responses. Thank you so much. Keep them coming. So much. I have very interesting responses. Just one moment. Thank you so much for your participation. I can see I can say that most have voted for they are being managed locally per country. So we have quite a vast audience. Maybe we can go to you, Anthony, and explain to us maybe employee benefits are often positioned as a value add by many employers across Africa. But from your experience and perspective, where do they start becoming a compliance and an actual financial risk for employers? So sorry, Anthony, we can't hear you.
Yeah, sorry, I was on mute. Thank you for that. Now, yeah, with the various laws in the various countries and how diverse each country is, it creates quite a key gap when it comes to compliance and ensuring that you are in line with the law. Of course, as per the law, there are financial penalties that are applicable when you're not compliant. I have seen situations where the regulatory body actually shuts down operations for an entire company just to get them to be compliant. This was in Chad. So, you know, with the financial penalties, the possible regulatory sanctions, of course, this is definitely a key risk. We have seen also situations or in countries where they are actually targeting individuals. So while they penalize the organization, they also go after the individual that they determine were mostly responsible for ensuring that the organization was compliant when it was not. So they would go after the CEO or the HR or the HR team. Of course, you know, the operational disruption during this exercise is not just about the financial penalty, but also the disruption if you've been forced to comply with this particular, or if they catch you to be non-compliant. Now, the biggest issue has been, number one, information asymmetry, especially in Africa. This information is not relayed in a way or in a proper manner that you're able to find or to find it easily. So when, for example, I'll give you an example. Most people are not aware that there is currently a bill in Kenya, and it has been in Parliament since 2024, which is supposed to replace the Work Injury Benefits Act. Yeah, and basically, if this particular bill is assented to or is signed into law, it would make private work or WIBA, as it's commonly known in Kenya, it, you know, it will make it more or less immutable. There will be no need to take out a private WIBA policy. Now, this bill has been modeled exactly or almost copy and paste or almost word for word as the Work Compensation Bill or the Work Compensation Act in Tanzania. So where the employer is contributing an amount to a fund and the employee gets access to this fund. So there is no insurance company, you know, on this transaction. But again, we've also seen the same changes in Morocco. We've seen them in Tanzania. Malawi recently also changed their compensation procedures. So these are the major risk drivers that, of course, are bringing about the non-compliance, because when you place a policy, you know, 2-3 years later, the law has changed, then you end up being non-compliant, where this information is not being communicated in a manner or in a process whereby everyone has the same information. Besides the frequent administrative or regulatory changes, we are now also seeing, of course, there is the human error aspect of, you know, a lot of people assume that insurance, for example, in countries where you have to purchase or procure an insurance policy in order to comply with the law, most people assume that this particular policy has been written by this insurance company word or line for line according to the law, which is never usually the case. So you'll find that this policy has caps, cappings, etc. And these are exposures. So you cannot say that since you have this particular policy that you are safe. You need to do regular audits to ensure that actually, you know, your exposure, even if you have an insurance policy, that you are actually in compliance. Besides that, of course, there are also reporting reporting requirements. Again, for example, in Malawi, Zambia, Kenya, Tanzania, you are required to have or you are required to report any particular cases or any, I would say, any event or any injury per se to a particular regulatory body within a set or within a certain timeline. So again, most people assume that once you have notified, let's say, the private insurer that you are in compliance. No, you need to also notify the government body. So the key benefits that are really focused on, and this is in Africa, I would say 99% of African countries, is health, pension, and work injury compensation. So in most countries, you find maybe one particular requirement by law, which is work injury compensation. That one is almost across a good number of countries. But then you will also find that besides that, retirement benefits, or what we call as pension, also applies in a good number of countries. So these are the two key ones. However, when you go to West Africa, like French West Africa, you'll also find health insurance being a mandatory policy. So you would take, there is the government minimum. So for people, we would call that the social health, where you contribute a small amount. And then there is a secondary cover that now you go to what we would call as IPM. These are private non-profit companies that you still have to take. And then besides that, if you want an additional cover, then you can go to private insurance. Tanzania has also implemented the same last year on health insurance. And again, if it is fully implemented, it will actually phase out private health insurance. That's what we see. And we've seen insurance companies starting to scale back as they expect once this law is fully implemented that very few people will be taking health insurance. Now, these laws change quick and they're very impactful, because once you're caught out, then the penalties, the back payments, etc., they become quite a huge issue.
Okay. Thank you so much, Anthony, for uncovering that as, just a nice to have benefits and showing us really where this could potentially be a risk for businesses. But I'd like us to get more specific into what actually shows up into day-to-day activities, maybe in the companies. And I'd like you to undertake this, and Anthony, you can help. Let's say in practice, where do organizations typically overlook compliance and benefits, like especially when they are scaling across teams, vendors, or even countries? What surfaces as these hidden compliance issues?
Right, thank you, Irene. This again is another core of what we help clients navigate through here at WorkPay. So I'll give you maybe specific failure points where we have encountered repeatedly. Number one being worker misclassification. And as we know, and based on changing times, organizations are scaling, and the boundary between contractors, consultants, direct employees often becomes dangerously blurred. And you find that most HRs at times are also in the middle of whether you're a contractor, whether you're a full-time employee, or basically a consultant. And to give an example, in Kenya, a contractor who works exclusively for over 6 months, typically by law, they ought to be an employee of that organization. And you find that a new employer who is expanding and coming to these regions would require all this kind of information so that then they don't have anything falling in the cracks and facing the law by not ensuring that their employees' statutory deductions are actually filed. And while at this, it means that employers need to be very clear when it comes to workers' classification. Ensure that you have clearly captured whether your employees are consultants, whether they are contractors, or they're full-time employees. The other bit is data alignment and administration. And I think Anthony has mentioned this in his previous conversation, stating that data ought to be managed and processed in a structured way, because a lot of employees have medical insurance with one provider, pension with another, payroll may be being administered by a different platform or by an organization's platform, work injury being administered statutory or through private providers. And on paper, everything might look very okay for you as an employer. But once there's a regulatory change or a portal migration, then we see that this is when we end up into fines and penalties, and falling through these cracks becomes a challenge to you as an employer, and because the systems are not speaking to each other. So honestly, that's one of the biggest lessons that we keep learning as WorkPay, and that's why we try to ensure that we bring all these solutions together for you as an employer, ensure that we cover compliance gaps. As you can hear from what Anthony was speaking about, different laws are being passed at different times, and so you need that consultant or that expert who is on the ground ensuring that we are updated with all laws across the countries, and we are updated with what ought to be updated within whatever period it is. And so you as an employer have easy time, and you have time to concentrate on your day-to-day activities, and you're also aligned. So we are aligned here at WorkPay with our automated payroll solution, which speaks to various benefits administration. And so we encourage all of you to ensure that whatever solution that you're offering as you expand as an organization, whether you're in Africa or even across, ensure that you work with organizations who have automated their processes and they're able to offer solutions as a pack. Now, the cross-border aspect is also another function, but I would want to invite Anthony, because Anthony is running one of the major partners that we work with here at WorkPay, and we have seen them offer us solutions that are aligned with compliance, and it is something that we take up highly in regard. And so I would allow Anthony to speak about cross-border complexity from his position. Welcome, Anthony.
Yeah, so now with most multinationals that we encounter is we find administration is usually centralized in one country. A good number would not have, let's say, a HR office in each single country, but rather centralized in a single country. Now, the expectation here being that the person handling this particular role is aware of the various laws and regulations in each country as and when they change. Of course, this is usually not the case. I did mention about one of the key difficulties in Africa is just how information is communicated and relayed. So what we usually find is organizations who are compliant in one country, but then are not compliant in maybe 2 or 3 other countries. So because of our network and our reach, and because we have 27 people who are actually in these offices, we are able to centralize, let's say, policies in situations where you have multiple countries being handled from one office. Now, one of the key issues, especially that we also come across, is especially for this statutory policy. If a policy is statutory, we have something called non-admittance. If the policy is statutory, you cannot have it on non-admitted basis. What that means is, so for example, let's assume you are based in or your head office is in Kenya, for example, and you have 2 or 3 employees in Uganda. You have to take a work injury policy from Uganda, not just from Kenya, and cover them in Uganda, because once the regulator comes to look at the documents, or maybe there is a claim, or maybe just a regular audit, then they will not recognize that you have a policy if it is written out of Kenya by an insurance company who's not in Uganda. So these are some of the key or the costly issues or mistakes that we have seen. People assuming, yes, my policy is compliant, but then it is not with a local insurance company. And we try, of course, to liaise with our very offices to ensure that we are getting these updates, and these updates are being sent whenever there are new changes going around, so that at least everyone is aware of what is happening across the continent.
Thank you so much both for that contribution. And I'm now getting curious about what our audience is worried about. And allow me to give it back to you in a poll, my audience. Let us know what concerns you most about the benefits or compliance benefits today. So let's hear what you guys have to say. What is worrying you in today's setup when it comes to compliance in benefits? Please feel free to engage. Thank you so much for your responses. Keep them coming. Thank you so much for engaging. Let us know what you're most worried about today in terms of compliance when it comes to benefits. Just take a minute to participate. Thank you so much for your engagement and your responses. Keep them coming. Can see people are worried about data privacy, errors, but let me just share what most of us are thinking. Most of us are thinking about the keeping up with the changing rules. Thank you so much for your contribution. And yes, you can actually keep them coming. So much. Thank you so much both for those. Really, we can see why this is a really important topic, because in Africa, and especially in the specific roles, it becomes really a concern to the employers especially. Okay, maybe we can go now to you, Anthony. Let's see, what are some of the less obvious or invisible compliance risks in benefits areas maybe employers assume are covered, but often they're not? Sorry, Anthony, we can't hear you.
not sure why it's muting. All right. So this is basically on two general things. Number one, we can cover this in one or two general aspects. There is the assumption that because you are compliant last year, you will be compliant or you are compliant this year. So the regulatory or the regulation is not or is changing fast in each country, and some are, trying to match, and it keeps changing quickly. So it does not mean if you are compliant last year, you are still compliant. Number two, it also does not mean that just because you have a policy document that you have complied with the regulation. In countries where you are required to purchase a private insurance policy, just because you have that policy, it does not mean that you are compliant with the regulation and you are not exposed. You are more than likely exposed. Remember, there are some risks that insurance companies actually push on to you that you might not be aware of. And of course, some of these are small. For example, in Rwanda, you only need to take care of funeral expenses up to less than $1,000 for employees. So why take an insurance policy for people in Rwanda to cover for work injuries? You might absorb that risk. But then in some countries, you'll find that the risk that the insurer has put on you is actually significant. So for example, most policies in Uganda, in Kenya, they would have maximum payout ratios. So they will not pay out the 8 times. Yes, it says 8 times, but then they will pay out up to the maximum payout ratio, leaving you with the difference. So liability will still attach. Just because the insurance company has not paid, liability will still attach. Vicarious liability, we say. So just to delve in deeper, regulatory reporting is also a key one. We did mention that you are required to, in some of these countries, even if you have purchased a private insurance policy, just because you have reported this particular event, you are still not compliant. You need to report it also to the regulatory body. Yeah, you've not finalized by simply sending an email to your insurance provider. Misaligned policy wording, I think we've captured this and why the policy wording may not be necessarily in line, as well as the benefit caps that we mentioned. And of course, there are also some, I think, what we would say, incomplete records. Again, you are required, and this is in a good number of countries, to maintain these records. So you have reported to the insurance company, you have reported to the regulatory body, you are still supposed to report this, or to keep these records for at least 5 to 7 or maybe 10 years. Usually most countries is 7 years. So this record must still be stored in one way or another, otherwise you're not compliant.
Really interesting. Thank you so much. And I can imagine now this becomes more complex as organizations scale, and with the changing workforce models, we have the remote workers that under EOR or PEO structures, and they are probably in multi-country teams. I can imagine this is adding new layers of complexity when it comes to benefits and thus even compliance. Maybe Diana, you can take us through these complexities and how it comes in, or when it comes to complexity in benefits administration.
Thank you, Irene. And I think this changing in landscape and structural complexity has really changed how benefits conversations are being held today. We are witnessing most organizations at this point changing the market right now. Why? Because organizations that once used to only exist in only one country are ending up recruiting employees in different countries, whether working online or even physically in those countries. So you find that organizations that were once just in one country are in several, and without maybe even a local entity, or with an entity but no structures to actually support them. And that is where precisely what you call the employer of record and outsourced payroll infrastructure becomes essential. And why? Not just because they are going to be hiring, but they support with compliance infrastructure. I think Anthony has mentioned a lot how it is possible to have an existing cover in a certain country, but not necessarily heed to the law of that country. Why? Because you find that different laws in different countries do not work in the same way. For example, I would give the Ugandan example with details of their work injury. Usually, employees are expected to be paid up to 5 times of their salaries, unlike now in other countries where you can actually pay up to 3 times their salaries. Now, in that case, WorkPay and even with partnerships with OLEA, we are able to ensure that the different countries and the different structures and laws as captured in their various statutory bodies are well taken care of. And at WorkPay, our positioning with the employer of record and payroll services across Africa, we have built a structure that helps employers solve that exact challenge, that complexity of understanding what benefit in what country and what labor law and statutory compliance is required. And so in line with that, we ensure that all employers are well structured in terms of compliance. And why so? Because remote hiring is very easy, but maintaining compliant remote employment is what really requires expertise. And that's why we have experts like Anthony here ensuring that in the various countries, they have entities in those countries to ensure that they understand what labor laws state in those specific countries. And that's how we partner with them to ensure that even as we offer these benefit solutions, we also have people who are actually on the ground and ensuring that solutions are offered in compliance with the laws in those countries. So the solution is a benefit infrastructure in every country and in every market, aware by design and system that ensures that it eliminates all these gaps and ensures that the framework is easy to scale, and also ensures that they are on toes with making sure that any regulation change that comes up, then it is implemented and implemented in good times to avoid penalties. I think that's it from me, Irene, and back to you.
Thank you so much, Diana. I can see there's a question, and I would like to circle this back to Anthony to please give us an example again on misaligned policy wording. Maybe give us a scenario.
Okay, so, let me give a technical example. So assume you have, I'll relate this to Kenya. Assume, so the Kenya Work Injury, we have the Work Injury Benefits Act, which might not be present next year. Let's wait and see. Now, according to the Work Injury Benefits Act, any employee, is permanently and totally disabled or happens to pass on, the payout is 8 times annual salary. Now, where this 8 times annual salary, it does not mean it has to come from the insurance company. It can come, you are the employer, you are the one who is liable. Yes, you take a policy to align, but long and short of it, the liability sits with you as the employer. Now, you find that an insurance company would give you this particular policy, a work injury or WIMA insurance cover. However, they would put a cap. Again, this is quite common in Kenya and Uganda. So they'll say we will pay 8 times annual salary, but the maximum cap or the maximum amount we will pay is 50 million. Now, if you have an employee who, for example, is earning ₦1 million per month, then 8 times annual salary is 96 million, right? Now, if the cap exists, or because the insurance policy has capped, that means the insurer will pay 50, then you as the company will be left with 46 million to pay for this particular claim. So that is the misalignment between what the law says and what the policy actually says. The same thing in Uganda, the same thing in Botswana. Insurance companies always would apply these caps. Now, there are also additional benefits which would be in the law, but they're not provided by the policy. So for Tanzania, we mentioned employers are contributing to a state fund, which is what this particular bill in Kenya is trying to emulate. So, however, this particular fund, as much as its employers are contributing to it, it does not cover everything. So medical expenses will be up to you as the employer to take care. The fund will not. Again, for the first 1 month, the fund will not pay any amount. Let's say it's a temporary total disability. For the first 1 month, it's still you as the employer to pay that particular amount. So we have various cases, even when the statutory or it's a statutory benefit and it's being managed by the government, you would still have liability coming back to you as the employer. And you need to be aware of this. Again, even the law in Kenya says someone is injured, you need to take care of the travel expenses. Now, it does not say this is an ambulance. Neither does it say for how long you should be taking care of these travel expenses. So ideally, if you follow the law, if you have someone injured from a work event, and they need to use an Uber for taking or going to and from the hospital, that means this is actually your liability. And as most of you know, this is usually not covered on WIBA or work injury policies. So there are mismatches, and you need to be aware of this and watch out and mitigate what you can mitigate, or make sure that you have a policy that responds in most of these cases, so that you're not left with a liability of $500,000 while you thought that you were actually fully covered.
Oh, very, very well put, Anthony. Thank you so much. I hope we have answered your question, Maureen Mushiri. Thank you so much for your question. And it's really interesting to see like this conversation is clearly uncovering how complex these issues can be. And I can imagine the big questions now, even for the employer, is now what do organizations need to do to stay ahead of this? So maybe Diana and Anthony, as your closing remarks, for organizations looking to scale maybe confidently, what practical steps can they take to identify and even close these compliance gaps because before they become liabilities?
Right. Thank you, Irene. I think the good thing is that most of these compliance gaps are actually preventable from an organization's perspective. And majorly, most important is to ensure that we are more proactive as organizations. And if I had to maybe just simplify it, we would have it in like 4 ways. The first thing being conducting compliance audits. And of course, this comes through just going through the various organizations or partners or structures that you're using. And I just don't mean reviewing insurance policies once in a year. It means really checking whether statutory deductions are accurate, whether the benefit tax treatments are also correct, and whether eligibility rules are still aligned with the various local laws, and also whether your partners or vendors are actually meeting their responsibilities. So once you procure a provider or a vendor, make sure that they are, number one, of course, registered by their various regulators. That is number one, because it does not mean because they were registered last year, as Anthony mentioned, that they are still registered this year. number two, it doesn't mean that because they have given you an actual solution previously, that even now the solution is still adequate. It is important to go through and also understand what solutions you have been offered so that you avoid any gaps or any cracks that may exist. A lot of organizations also discover these gaps when their employees are ever in an incident or they have dispute, or even when the local authorities come knocking your door. So it is important to avoid such items. And maybe the second item that I would want also to highlight to employers is cost sustainability. We keep saying as you grow as an organization, of course, costs also grow, but it is also important that we also assess our costs to ensure that you're a sustainable organization. When it comes to healthcare and insurance costs, of course, these costs have been increasing over and over different times. So organizations need to continuously just ask themselves whether they are running the current model and whether it still makes sense or financial sense in the long term, and whether employees are utilizing the benefits properly, whether they even understand the various benefits, and even become smarter in the kind of structures that they are running. Because you find that an employer would have taken a very high level kind of standard of healthcare. However, employees would even appreciate solutions like mental wellness, health checkups, which maybe are offered at very minimal amounts. And so it is important just to review what solution you're offering to your employees, review the utilization reports, so that you also understand where to put more of your funds, where to invest more, so that then your employees benefit. And if that would even call for a cut in terms of premiums paid, then you would also be saving as an organization. And then we keep saying information is knowledge, and it helps you also as an employer to also make informed decisions, because you could find that you're paying for solutions that maybe your employees do not even appreciate. So it is important that you also as an employer assess the solution you're offering, so that you're also able to see on areas where you can cut costs from. The other two pointers, I would hand them over to Anthony, because as a partner, they support us a lot in ensuring that the two are implemented and actually offered as a solution to employers. So over to you, Anthony.
Okay. Now, I think one of the key things just to ensure that you are not caught out, besides the compliance audits, is educating your employees. Or in most countries, what you will find is whenever there is a dispute, let's say someone comes and reports that this happened 10 years ago, 5 years ago, 7 years ago, and I was never compensated. Whenever this dispute arises, these regulatory bodies would want to see, number one, has the employer been organizing these sort of events? So have you been organizing sensitization sessions whereby, employees were told that this is the health cover, this is the mandatory cover that you have available, this is the workmen compensation policy that is available, and this is what it covers. So these particular bodies will want to see evidence that you have done this before they even they start reviewing this particular claim. Secondly, it's just because of how organizations are structured. Most organizations now have this sort of, I would say, sort of work groups whereby they do not necessarily have like a HR looking into each of these work groups. So employees they know that when they're injured, they need to go report to their supervisor. Their supervisor does not know that they need to report, let's say, to the government portal. Yeah. So they just give them an off day. Yeah, 2-3 days off. The employee goes home and maybe they are back after 1 week or 2 weeks, and that ends there. Unfortunately, this is not compliant. So it's very important that all employees, this information is circulated to the final user, and to be able to, so that they are able to report this whenever something arises. And also, of course, to take advantage of the benefits that have been provided, statutory or not. In terms of local expertise, like I mentioned, Africa is a very difficult continent in terms of getting information. I remember last week we had an exercise where someone was using Copilot to look at the mandatory employee benefits to provide for people in Morocco, while I was using Claude to search the same. These are AI engines, and both of them were giving us different information. So it is very important that you do take advantage of local expertise. Our continent is quite a challenging continent because of information asymmetry. Unlike other markets like Europe, US, Australia, even South Africa, where you can easily access most of this information. But yeah, out of South Africa or rest of Africa region, it becomes more and more difficult. And whenever there are amendments and changes and new bills or laws being put in place, they're usually relayed quite silently. You'll only find out about them after the fact, or when you get an invoice from the regulatory body, or once they come to your office to seize your operations.
Okay, that's really insightful, Anthony. And I'm just wondering, now that we have covered the employer's perspective, me and John C, we're wondering, how do we as employees know if our employers are actually implementing compliant benefits to us? Diana, maybe you can help us.
Yes, thank you, Irene. And that's an important question. And just to add on to what Anthony has just said, this education to employees is usually a requirement or a standard practice that insurers and insurance intermediaries offer to the employees of employers. And therefore, if you as an employee has never had a session, it is always good that you go through your organization's human resource experts so that they reach out to the providers and have a member education session. Why this is important is because you as an employee at that point, you're able to ask questions so that you also understand what kind of cover has been issued and what it is that the law says. Because like we've said, as much as employers are able to do audits, at times an employee would actually identify a gap that would help the employer be able to ensure that the same is taken care of before an incident happens.
Interesting. I have pretty interesting questions here. We can shift now to you, Anthony. How do we ensure that we are compliant, especially when it relates to salary benefits at the time when the government increases salary, yet a company level that does not take effect based on the operational cost at company level? How do you counter that with the management?
I'm on the insurance. For salary, I'll take it back to you.
Diana.
All right. Thank you, Anthony. Yeah, I think when it comes to salary benefits, usually we have standard organizations policies, and I think this is where the human resource team comes in. Depending on company policies per organization, then there are certain rules that are followed, and depending on the inflation rates, you find that some employers will be able to give a buffer or an increment on annual basis to take care of inflation. However, there are some that will still not be able to offer the same, but in line with specific insurance or rather human resource policies, then we may not be able to guide further because it depends with what the organization has in their policy. So it is important that you also reach out to your respective human resource teams so that you read about the organization policies when it comes to salary adjustments, because you find that during onboarding, I think most times employees are very excited to move from one employer to another, that we don't get to read the human resource policy documents that are handed over to us to read as you onboard. So some of these policies and some of the employment contracts usually are very clear on how salary increment is governed in a specific organization. I hope that answers your question.
Me too. Thank you so much, Diana.
Just
I
to
want to
comment that
Yes.
before, because we have seen this also on our site, in terms of deductions. So we have seen situations where the government increases like the retirement savings, and because of the increase of the deductions, companies decide to, let me assist my employees by taking care of a portion of their deduction. So I'll give you an example. So, you know, a few years ago, Kenya increased it to 12%, 6 plus 6. However, we did see some organizations coming in and saying, instead of asking my employee to contribute 6, I'll do 10 and leave them to contribute 2. So that is fantastic. However, you need to be clear about what the law says, because in most countries, that is not allowed. If the law says employee 6, employer 6, regardless of how much the employer wants to assist, the employee must still be seen to contribute 6% of their salary. So yeah,
really
also one of the key compliance gaps we've seen.
And maybe just to add on to that, Anthony, in such instances, we find that most employers would rather increase on your salary so that either way, after the deduction is done on a 6x6 basis, then your net off still remains the same, in the sense that they just topped up on your basic salary, but your net remains the same after adjustment of statutory payments.
Yeah, and I feel like we are really uncovering so much when we talk about employee benefits administration, and I don't think we have the time to actually cover what must be. But thank you so much, Anthony and Diana. But before we go, I'd like to give it back to the audience and see what they think they should prioritize next after this session. So kindly participate in our last poll. Let us know what you'd want to do maybe after this. What do you think is your priority after this session? Feel free to participate, and thank you so much. Thank you so much for your participation. Keep your answers coming. And I must say, I really appreciate you guys for staying with us, and also engaging with us. It's been a pleasure, actually. I hope we can continue with this conversation, Diana and Anthony.
Thank you, Irene. And maybe as a parting shot, I can see that what our audience are saying should be a priority is updating policies and documentations. And for sure, that is very right. When it comes to employee benefits, apart from this being a human resource responsibility, it is important that employers also engage employees and ensure they have proper policies set in place to ensure that they remain compliant, and also as a business sustainability strategy, because this is where we have cracks in organizations, and you find that employees leave and go and sue organizations just because there lacked proper documentation and policies set in place. So yes, I agree with all of you. What is very important going forward, ensure you update your policies and documentations, and also engage with your employees so that they can understand what solutions you have procured for them, so that you're not spending on policies that employees do not understand and do not utilize in the proper or in the best way possible. Thank you very much, Irene, for having me. It was a nice conversation, and thank you to the participants for being active with the questions.
Thank you so much. Maybe Anthony, a parting shot or your parting words for us?
No, I think we've covered a lot, and I'm conscious of the time. Just to wish everyone a good evening and lovely weekend ahead.
Thank you, Anthony. Thank you, Diana. Thank you so much for everyone who joined. And we have recorded this session. We'll be sending over, and it's also going to be on our YouTube channels. And feel free to reach us through the emails, and the numbers are provided on the chat and on the screen rather. And it was a pleasure, an absolute pleasure to host you guys. I'm going to have to say goodbye for now.
Thank you.
Thank you.
Okay, bye.